So I review food and beverage brands' financials all day, every day. And there are three tax strategies that almost every single one of them miss. Number one, this is the COGS misclassification. So most food and beverage brands are booking their packaging materials, inbound freight, co-manufacturing fees as operating expenses. And that's just wrong, right? So under IRC section 471 and 263A, those costs have to be capitalized into inventory. And so which means they flow through COGS, not your overhead. If you're doing 5 million in revenue and you've been miscategorizing $200,000 in co-man and freight costs as overhead, you've been overstating your gross income by 200,000 every year. Section 179 and bonus depreciation, and the rules just changed significantly in tax year 2025. So the One Big Beautiful Bill Act was signed into law on July 4th, 2025. And here's what that means for your 2025 taxes. Under IRC section 179, the annual expensing limit jumped from 1.22 million to 2.5 million. And under section 168K, 100% depreciation is now permanently restored for qualifying assets that are acquired and placed into service after January 19th, 2025. Then we get to number three. So number three is the R&D tax credit and research expensing. And this has kind of two layers to it. So layer one is the IRC section 41, the R&D tax credit. So if you're developing new SKUs, reformulating existing products, testing new flavor profiles, or even just improving your production process, this qualifies as research activity. Section 174A permanently fixes that. So starting with tax years beginning after December 31st, 2024, you can now fully deduct domestic research costs in the year you incur them. And here's what most brands don't know is if your gross receipts are 31 million or less, you may be able to actually retroactively go back and apply this to 22, 23, and 2024. But the deadline to do that is July 6, 2026. So that window is closing. And guys, this isn't a gray area. I mean, it's in the code, it's there. And the problem isn't that these strategies don't exist for you. It's that just most general accountants and general CPAs just aren't applying them to food and beverage businesses specifically. They just hit the low hanging fruit of how to lower your tax liability, right? But follow PSA and follow me for more tax advice.